Hello everybody and welcome to The Real Show. And today, as I promised, we have to get with us a guest. Hello Adam and welcome.
Thank you very much for having me, Andreas.
It's a pleasure. And we have Adam with us today because Adam Richardson is a partner with Corman and Company Professional Corporation and has been a part of the team for quite a few years. Now, his practice is mainly focused on real estate law with residential real estate, comprising a large portion of his work and his everyday life. So this is why we invited him today, because we want to pick his brain. One of the things that people are usually concerned with, and we get questions quite often, is what are the rights and the abilities, or the benefits even, that someone has if they are a first-time home buyer?
Andreas, thank you. That's actually a great question, and I'm glad that you brought that up.
Okay.
First of all, I just want to just maybe mention that all of the information that we're going to be providing here today is just going to be for informational purposes only, even though it is coming from a legal professional. If you do have, or your clients have, a specific legal matter that they need advice on, it's always important that they speak to a lawyer about their specific needs so that they can get an answer that actually relates to their specific issues. So we just wanted to start off with that. But it is...
That was perfect. Perfectly said as a lawyer. Perfect. Let's go.
There you go.
So,
all right, perfect. So first-time home buyers.
Yes.
So first-time home buyers, there is incentive by the government, several different levels, in order to encourage them to buy property for their first time. Mm-hmm. And when we're talking about first-time home buyers, we first should talk about who are first-time home buyers.
Okay.
First-time home buyers are individuals who've never owned property anywhere in the world, not just in Canada, not just in Ontario.
Right.
They can also not have been married to somebody who has owned property before. They must move into the property within the first 9 months of closing. So these are properties that people are using as their principal place of residence.
Okay.
They also need to be either a Canadian citizen or a permanent resident of Canada. And yes, those are the major components or requirements for being a first-time home buyer. Now, in terms of the actual eligibility, what are you getting for being that first-time home buyer?
Exactly. What are the benefits?
What's the benefit? So from the provincial government, you can get a credit against your land transfer tax for up to $4,000.
Nice.
From the City of Toronto, you can also get $4,475 up to that amount as a credit against your land transfer tax as well.
Okay.
And again, remember, this is a one-time shot. That's the only time that you're going to be receiving it, because afterwards you will have owned an eligible home, so you're no longer
So even
qualifying.
if you sell your property at some point and you rent and then you decide to buy again,
Right.
you can never get...
And there's a lot of confusion with that, actually,
Okay.
because we compare those eligibility criteria for the land transfer tax rebates
Mhm.
against the home buyer plan for RRSPs. So that's at the federal level.
Right.
They do also have benefits for first-time home buyers to be able to draw up to $25,000 from your RRSP account towards your first purchase. And you should check out their website, but essentially you do have to repay that money over a 15-year period, but you don't have to pay tax on drawing out that money from your RRSP, which is very significant. So it's again another benefit for first-time home buyers to be able to use an account that really was supposed to be pertaining to their future retirement to be able to buy property now.
But they have to pay it back, but the benefit is basically that they don't pay any tax on it.
You don't pay tax.
And they don't pay any interest on it.
You don't pay interest on it either, exactly. So you're essentially funding yourself for a 15-year loan to be able to purchase this
Which
property.
is pretty good because
It's significant.
people usually struggle, especially first home buyers,
Yeah.
like they struggle with getting together the deposit or even some of the closing expenses.
Right.
So 25,000.
And remember, Andreas, there's a tax benefit for contributing to your RRSP in the first place. So clients should talk to their own accountants to find out what that exact benefit's going to be for them. But you can essentially save the tax that you would have paid on that $25,000. So that's money that you have on the side that you can use again towards your closing. Plus you've unlocked the 25 that's sitting in the first-time homebuyer RRSP essentially pot that you can draw from and again repay without the interest and without having incurring income tax on that. So that's very significant in addition to that first-time homebuyer rebate.
So just to recap, basically you have the ability to get a rebate of up to 8,000 plus dollars.
8,475. Yes.
475. There you go.
As long as
8,000.
you're in Toronto.
Yes, as long as you're in Toronto.
That's right.
8475.
Yes.
And at the same time, you can activate the ability to access those 25,000
Exactly.
from your RSP. That's perfect. So let me ask you this. So this is about first-time home buyers, but does this apply to newcomers? What happens with newcomers? Because
That's a great question too.
there are persons that they just came in the country now
Right.
or the past year. Are they able and
Right.
eligible to get these benefits?
So I think that's a very good question, and I just come back to the point of reiterating to newcomers that this rebate is only available if you have never owned property anywhere in the world. There
Right.
does seem to be a disconnect from people who believe that it's almost a right to receive that rebate.
Mhm.
It's not, it's a policy initiative to encourage people to buy their first home. So if you've already bought your first home elsewhere and you're coming here, you don't meet that qualification. But if you are a first-time home buyer in Canada, it doesn't matter where you're from, you would meet the qualifications, except you do not meet the qualification that you are either a Canadian citizen or permanent resident of Canada. But
Okay.
everything is not lost, because
Right.
you do have 18 months following closing to be able to apply for those rebates in the event that you do get your permanent residency status during that time. And all you have to have done is lived at the property as your primary place of residence during that period of time. So if you meet all of the other qualifications and you do get that PR status within that 18-month window, you again within that same period of time can apply for that rebate. And it's quite significant, so it is worth individuals keeping that in the back of their mind.
Okay, within 18 months, you say.
Exactly.
So does this cover people that are here with a work permit?
So that's a great question as well. So when people start asking questions about the work permits and newcomers and how is this implication gonna like what's the implication on that sort of a type of tax? What we're looking at there is something called the non-resident speculation tax.
Okay.
And it's also known commonly as the foreign buyers tax.
Right.
And essentially this is a tax
15%.
that is 15% on top of the purchase price, okay? And this isn't funded through a mortgage, but this is 15% on top of your purchase price. That is money that has to be remitted to the Ministry of Finance in addition to land transfer tax for individuals who purchase property that are considered to be foreign buyers. And
Okay.
foreign buyers on the individual side, we're not going to talk about the corporate side,
Right.
but it's individuals who do not possess either their Canadian citizenship or permanent residency.
Okay.
So for those individuals, they do have to pay the 15% tax on closing.
So if I'm on a work permit and I want to buy something now,
Even if you're on a work permit.
I have to
Yeah.
pay the 15% foreign buyer
Yes.
tax.
But there are certain situations, there are certain exemptions,
Okay.
but more importantly, there are certain rebates that are available. And the rebates are what I would want to focus on at this point. So
Right.
if you have that work permit, one of the rebates is that if you have worked legally in Ontario for 1 year from the date of closing continuously,
Mhm.
and the property has remained your primary place of residence during that period of time,
Mhm.
you can apply after that year to the Ministry of Finance to get the full 15% back.
Okay.
That's significant.
That is significant.
In the
But-
event-
but
yeah, go
within
ahead.
within a year.
So you actually have up to 4 years to apply for the rebates with the non-resident speculation tax. Somebody who's been working continuously for a year is eligible after that 1 year, so they would of course want to apply right away.
But some people may need 4 years to become eligible and
But
get.
some people, right, so the other rebate options really are in the event that you are you're essentially, you get your PR or your citizenship, usually it's PR,
Mhm.
within that 4-year window, you again have the ability to apply for that rebate to get the full amount back. There are some exempted individuals who aren't applicable, like the non-resident speculation tax is not applicable to them.
Right.
We talk about nominees, so individuals who are registered under a very specific immigration program.
Okay.
They would know if they were listed. Most
Okay.
individuals
And always,
are not.
always,
Yeah.
it's no harm to ask for
No
the
harm to
opinion of a
ask.
professional.
Yeah. Refugees, but most importantly, if you are a non-resident, so you're a foreign buyer, you do not have your permanent residency or citizenship,
Mm-hmm.
but you buy a property jointly with your Canadian spouse,
Yes.
and you hold the property jointly and you live there as your primary place of residence,
Right.
no tax.
Okay.
That's significant because
Right.
there are a lot of individuals who come from overseas and they've married overseas and they come here and they want to buy their property and have their home and raise their children
of
here.
course.
and they don't want to pay the 15% tax, and the government is saying that they are not they're not subject to that tax, which is
that's significant. So from the
Yeah.
moment someone comes here, falls in love with someone else, they
Right.
get married, the person that came here still is on a work permit, let's say 3 years later,
Yeah.
but because that person is now married to a Canadian citizen,
that's right.
they don't have to pay the 15%.
Because it's their place of residence, their primary place of residence as well, and they're both on title jointly. So yes, that's essentially the concept, and that brings us to the next very significant point of this, is that who is really that foreign buyer? It comes down to, yes, go ahead.
I had a question about this one that
Yeah.
you mentioned. It was in the back of my head to ask you. And what happens, because I know quite a few friends of mine and friends of friends that are from older generations, but they are now no longer living in Canada, right? Like they decided to go and buy a house in Greece, and they live there, or they rent a house in Greece or whatever, anywhere else. And the point is, what happens if they decide at some point in time, they're no longer obviously a tax resident even of Canada, they're
Right.
still Canadian citizens,
Right.
right? But what if they decide 5 years from now to come back and buy a home here again? Does that mean that they will have to pay then the 15% foreign tax?
Right. So the government, when they were designing this essentially this policy initiative to essentially try to detract foreign buyers from buying property in Canada without paying a tax, they did consider that, and essentially what they've decided is that if you are a Canadian citizen or a permanent resident, it does not matter what your residency status is for tax purposes, you would be exempt from the non-resident speculation tax. There are, of course, other taxes that those individuals would want to consider as they are a non-resident, so they would need to speak to their accountant and discuss withholding taxes and that sort of thing. But the non-resident speculation tax, that big 15% tax,
They don't pay.
they're exempt, exactly.
Okay.
So that is significant.
That's a good
Yeah.
point. So that's a very interesting point. And of course, they'll have to check other things. Like, for example, they may be, since they are a tax resident of another country,
Right.
they may have to pay tax for the property that they buy here over there.
It's entirely possible. It
So
would
they'll-
depend on those regimes, those tax regimes. But again, yes, it's very important. You'd want to have your tax advice in your new local country as well as in Canada where you're purchasing your asset.
Okay.
Yeah.
All right. So that's pretty interesting things. Now, I think we've covered the first home buyers. We went into newcomers. We even
Yes.
went into the foreign buyers tax. Let's switch the subject now,
Okay.
spice it up, if you will, and ask you what's happening with pre-constructions. And I'll tell you why I'm asking the question. Obviously, everybody knows that the condo market has been on fire,
Yes.
right, for the past quite a few months. And the point is, pre-construction is becoming a very popular choice, as well as assignments, which are two different issues but are actually interconnected.